and welcome back to another episode of India Roundup. My name is Paloma Quadras, and today we have some top headlines from business news. Foreign portfolio flows in 2020 turned positive after COVID-19 jitters. This has led to aggressive buying by domestic retail and wealthy investors. In March and April, overseas investors took out over $10 billion but sustained flows of $7.5 billion over the past 4 months have helped erase the deficit. Currently, FPI flows into equities on a year-to-date basis stand at $230 million. Overseas flows into the debt segment, however, are still negative at $14.6 billion. Saurabh Mukherjee, founder of Marcellus Investment Managers, was quoted as saying, "Central banks are clear they will print money for the next 2 years. As they do so, the cost of capital will further reduce. We will receive more FPI and foreign direct investment." Amazon India to pilot online pharmacy in Bengaluru. This has met with opposition from the brick-and-mortar body of chemists who have written to the e-commerce giant Amazon India's global CEO, calling Amazon's foray into the country's online pharmacy space as illegal. An Amazon spokesperson stated that Amazon plans to pilot offerings of medicines in Bengaluru as part of their commitment to fulfill the essential needs of their customers from certified sellers whilst people are staying safe at home. 2 senior government officials have said that according to India's drug regulations, retailers require a license to dispense medicines from the state in which they are being sold. As Amazon operates as a marketplace for various vendors and is not allowed to own inventory, it may be exempted from these requirements. Instead, the vendors on its platform would require such a license, said experts. Divergence in average disbursement under Emergency Credit Line Guarantee Scheme. With the government allowing individuals who have taken business loans and larger MSMEs to avail funds under the scheme from August 4th, banks expect sanctions and disbursement to pick up pace going forward. Launched on May 23rd, the Emergency Credit Line Guarantee Scheme, which provides additional 20% collateral-free credit fully guaranteed by the central government against loan losses, was extended to individual entrepreneurs from August 4th and is open until October 31st or until the rupees 3 lakh crore has been sanctioned. Companies with outstanding loans of up to rupees 50 crore and annual turnover of up to rupees 250 crore as on February 29, 2020, were allowed to avail additional financing under the scheme. Of the total 22.77 lakh loan accounts which received disbursement under the scheme, public sector banks catered to 87.1% of total accounts, 12.9% were served by private banks and non-banking financial companies.
To celebrate life, come to Gujarat.
Sensex rises 142 points, L&T spurts over 4%. Equity benchmark Sensex jumped 142 points amid positive cues from global markets. After rallying 390.12 points during the day, the 30-share BSE benchmark paired some gains to end 141.51 points higher. According to traders, market sentiment was positive amid cues from global indices and consistent foreign fund inflows. The NSE Nifty climbed to 56.10 points. L&T was the top gainer in the Sensex pack, rallying over 4%, followed by Mahindra & Mahindra, Sun Pharma, NTPC, Tech Mahindra, ICICI Bank and ITC. Reserve Bank of India bans routing of term loans via current accounts. This is in a bid to prevent the misuse of bank funds, which was a common practice among borrowers to divert funds by siphoning off funds from term loans of banks through current accounts in other banks by corporates and big borrowers. This effectively means banks which have given loans will now handle the current accounts of borrowers who in turn cannot divert money for other purposes through current accounts of other banks, mainly private and foreign banks. A source was quoted as saying, "For most corporates, while loans are given by public sector banks, current accounts are managed by private banks. This will stop now. PSU banks which have given credit and overdraft will now manage current accounts as well." Aramco still aims for $15 billion investment in Reliance Industries Limited refining and chemicals business. Saudi state-owned Aramco is already a major supplier of crude to India, while Reliance sells petroleum products including gasoline to the kingdom. Reliance shares fell in mid-July after Chairman Mukesh Ambani said a transaction had been delayed due to unforeseen circumstances in the energy market and the COVID-19 situation. A deal with Reliance would help the world's biggest crude exporter join the ranks of the top oil refiners and chemical makers. Aramco reported on Sunday that second quarter net income was down almost 75% from a year earlier. It has been slammed by roughly 33% drop in oil prices in 2020. The coronavirus pandemic halted travel and businesses, slashing demand for crude and fuel. Chinese funding in Indian firms hit by the new FDI norms. Chinese investments in Indian startups have fallen this year following changes in foreign direct investment rules that made prior government approval mandatory for investments from countries that share a land border with India. The stricter government rules around foreign investment from neighboring countries came into force in April and was mainly aimed at restricting investments from China. Even American and European investors who are investing in India are facing hurdles because several of them have raised some amount of money from Chinese firms. The government hasn't yet clarified on the thresholds that will be used to determine which investments need to go through an approval process. Many investments have been delayed due to this lack of clarity. Chinese investors had invested $166 million in India startups between January and July, compared with $197 million a year ago, according to data from deals analysis firm Venture Intelligence. India to invest $1.46 trillion to lift virus-hit economy. Prime Minister Narendra Modi announced on Saturday that the government has identified 7,000 infrastructure projects to offset the economic impact on the pandemic and plans to invest $1.46 trillion to boost the sagging economy. He said the key lesson India learned from the pandemic is to become self-reliant in manufacturing and developing itself as a key supply chain destination for international companies. Thanks for joining me today. Do like and subscribe to our channel. Till we meet again, stay safe and take care.